Hey guys, welcome back to another video. In this video, I'll be talking about hatch.as. Hatch.as is a platform which allows people who live in New Zealand to buy US stocks, as well as stocks from other countries. So in this video, I'll be going through an overview of what Hatch is, what the fee structure of Hatch is, what you can buy on Hatch, and we'll also be talking about whether your money is safe on the platform, as well as the tax implications of using Hatch and buying foreign assets using Hatch. Just want to make clear that this is purely for educational purposes only. The matters on taxes that I later discuss is just a starting point and does not constitute tax advice. So just to give you a little bit of background, Hatch Invest is a relatively new platform. I think they started about late last year. So I've been using their platform for quite a while now, and I do really enjoy the service that they provide. So Hatch Invest is a New Zealand company which is part of the Kiwi Wealth brand. The ultimate parent company is the New Zealand Post, and we know that New Zealand Post is fully owned by the government of New Zealand. Hatch also allows you to invest in brands that you know and love. So there are a lot of brands that are international and from the US. So your Nikes, your Teslas, your Facebooks. The New Zealand market is quite small, and so Hatch is a nice complement to add on overseas exposure and different sectors as well. Moving on to fee structure, the fees are $8 for a trade when you buy or sell between 1 and 400 shares. If you buy over 400 shares, then it's an extra 2 cents for every share that you purchase. For example, if you buy 401 shares in a company, then you'll be paying $8.02. If you buy 50 shares of a company, you're paying $8. Whereas if you buy half of a share, then you'll be paying $3. So any fraction of shares is $3. If you buy 0.99 shares in a company, that is still $3, whereas if you buy one exactly, that's $8. Because Hatch uses US dollars to buy shares, when you transfer your New Zealand dollars into Hatch, they will charge you a conversion fee. So the fee is 50 basis points, which works out to be about 0.5%. So the 0.5% fee is quite fair. It's quite close to what other banks would charge you. If not, it's probably even cheaper. As well as the transaction fee and the FX fee, they charge a one-off fee as well to process your tax information. So that is a one-off fee of $1.50 US dollars. As well as that, they charge an annual fee of 50 cents to maintain your tax information. Another fee to note is an inactive account fee. So if you don't make any trades during the 12-month period, then you'll be charged a one-off $12 fee and $1 for each month subsequent to that 12-month period. Basically, you just have to make one trade and be good for the next 12 months. So make sure you do that and there won't be any inactive fees there. To sum up, I like using Hatch as a platform because the fees are very low. The transaction fee of $8 and the FX fees of 0.5% is very reasonable compared to what we currently have, which is really nothing. And I do use it more than once a year, so I'm not subject to the annual inactive fee. So if you like more information on fees, they have a post on their website as well, link in the description. So what can you buy on Hatch? Well, basically you can buy any stocks that are listed on the New York Stock Exchange as well as the NASDAQ. As well as that, you can buy some foreign companies through what they call ADRs, which stands for American Depository Receipts. ADRs are basically stocks from other countries outside of the US. So not only do you get exposure to US stocks, you can get exposure to Chinese stocks, to Brazilian stocks, emerging market stocks as well. There are extra fees when buying ADRs. The fees are between 1 to 3 cents per share. All right, moving on to safety of your shares and cash. So every user would have the concern of whether their cash and shares are safe. And Hatch has a page on this saying how they keep your shares and money safe. So on the Hatch website, they mentioned that their US partner, the US broking firm, is Drive Wealth. And Drive Wealth basically owns your stock and for the benefit of their customer being you. And that doesn't mean that you have less rights over it. You still get complete rights over it. I had a email saying that I can vote for shares of Facebook, which I owned at the time, and I still currently own. And so I had the right to vote at these shareholder meetings, which is quite nice. So you don't lose any of your shareholder rights under this structure. So the reason why they have Drive Wealth owning your shares under this sort of system is because if they had a individual account created for you that establishes a brokerage account under your name, this would cost a lot more, and this would be considered a full service brokerage account. And usually with these accounts, you have annual fees as well. So by having it under the Drive Wealth name, they can reduce a lot of the costs involved. Now, talking about whether your cash is safe. So the thing is, when you bring your money into Hatch and it gets converted into US dollars, what happens is that the US dollars are automatically invested into a money market fund. So if you leave your money in the account, you do get a dividend, monthly dividend. So for example, in my case, I had a $2.54 US dollars dividend from the money market fund for the month of September. So this is just money that sat in my account. And based on how much money I had, I received a dividend. So it's like having interest on your current account, which is very nice. So that's how they keep your money safe, by leaving it with the money market fund. And the money market fund is very liquid. It's basically still cash, and you can invest that money elsewhere. So what happens when Hatch or Drive Wealth goes under? If Hatch goes under, that's completely fine because your stocks are held with Drive Wealth, and basically Hatch going down doesn't mean a thing to you because all your stocks are under Drive Wealth's name. But if Drive Wealth goes down, then you're basically covered by insurance from the United States. They have what they call Securities Investors Protection Corporation, which insures to amounts of up to $500,000. My opinion on the safety of the platform is that you'll always be taking some sort of risk when buying stocks and not having it directly under your name, but I consider the risk to be very minimal. And to add on to this, Hatch is owned by the New Zealand government. They'll likely be backed by them, and they'll probably be here to stay. So moving on to tax implications. Again, this is not tax advice, so you should always seek help if you need tax advice. Hatch actually has a blog write-up on this, so be sure to check it out. So there are basically two sides of paying your taxes. You have to pay taxes in the US and you have to pay taxes in New Zealand. So taxes in the US are easy because Drive Wealth sorts that out for you. So the one-off fee that you pay, the $1.50 when you sign up, is basically going to Drive Wealth to sort out your tax information, and every year you pay 50 cents. That's also your annual tax forms. So that's very easy. US is all sorted for you, US taxes. So the only taxes that you really have to worry about is the New Zealand taxes. Basically, if your account value is below $50,000, then ordinary tax rules apply. Any dividends will be taxed at the source, so it will be taxed in the US, and in New Zealand, you declare how much you paid and you will be eligible for a credit up to 15% of the tax paid. If you have more than 50,000 New Zealand dollars in your portfolio, then you'll be subject to FIF rules, which stands for Foreign Investment Fund rules. There's two different ways to calculate foreign investment fund rules. So for investing in equities, overseas equities, you'll be either subject to fair dividend rate or the comparative value method. So using the fair dividend rate, you'll be taxed at 5% of your entire foreign shares holding. So this means that even if you have shares outside of Hatch, that would be included as well. But assuming that you only invest in overseas stocks using Hatch, then you'll just use your Hatch NZD amount. And so that's calculated by the opening market value times by 5%. As well as that, it includes any quick sell adjustments. So if you buy and sell within the year, you'll be taxed on that as well. The second option is the comparative value method. So that basically involves taking your closing value plus gains less opening values plus cost. So the thing about taxes under the FIF rule is that you can choose whichever one yields you less tax obligations. So you can do a bit of tax planning here. If you make a profit, then chances are going with the CV method would be higher than going with the FDR. So you would use FDR. But if you made a loss during the year and you didn't make any quick sales, then the CV method most likely will yield you a lower tax burden to pay. When it comes to tax information, Hatch basically puts everything together for you. So on this page here, we have the tax information all collated for you. And it says here, Drive Wealth has already sorted out all your US taxes, which is what I've mentioned before. And they also have all these reports that allow you to basically sort out your tax information much easier, because it has, for example, all your buy and sell transactions all at one place, and all you need to do is download that information, and yeah, basically you can give that to your tax advisor, whatnot. And as well as that, if you had less than $50,000, they make it easy for you. You can just plug these numbers into your IR3. Hatch has a very good interface when it comes to tax, but if you do need advice, I encourage you to seek help from a tax advisor. So overall, I think Hatch is a great platform to use. I use it personally to diversify away from New Zealand. As well as that, it charges low fees as well. If you'd like to sign up for Hatch, I have attached a referral link below. I don't get anything out of this, so yeah, it's not a trap. And Hatch didn't pay me to make this video either. I'm just doing it out of my good heart. They did send me chocolate over the mail, so yeah, thanks Hatch. Yeah, appreciate it. Make sure you hit that like button to start compounding your interest today, as well as subscribe if you want more content like this. So until then, take care. It's the party in the USA. All right, guys. Sorry about that.